check out our website, mcenow.com, where you'll find news, training, events, and opportunities you can start using right now to positively transform your personal economy. It is no secret that when you entrust money to a financial services provider, like an insurance company or a bank or brokerage firm, you are trusting them to be good stewards of your money. You're also trusting them to have your money available when you need it based on the terms of, whatever it is you agreed to, whatever you and that company agreed to. However, that doesn't always happen. So the question becomes, how can you determine whether or not or how much trust to place in a financial services company? Well, there is a way, and we're going to talk about that. But first, I want you to subscribe to this channel. I want you to hit the bell icon so that you'll be notified of videos like this when we drop them. Because as you're going to see, we're going to go through this, and I'm going to show you what happened to some policyholders at an insurance company that is really, hurting them right now financially. And so you want to be able to avoid these things and play to prosper. So hit the subscribe button, hit the bell icon, like the video, just give it a thumbs up. It's easy. And share this with a friend because a lot of people need to know this. So how do we determine what level of trust to put into a financial firm in general? In specific, in this particular video, we're going to talk about the insurance companies, life insurance specifically. Now, when you go out there and get a policy for life insurance, the first thing you're thinking is, okay, if something happens to me, this policy is going to pay out and it's going to help my loved ones continue to be able to live the life that we've become accustomed to because it's going to replace my income. My kids are still going to be able to go to college. I'm going to make it so that my spouse is still able to pay the mortgage and keep the house, the cars, won't have to touch qualified accounts like 401ks and IRAs and then be penalized for that on top of the tax. That's what people think of when they go and they establish life insurance. Now, that's the first thing people think about with life insurance. But you got to understand that a properly structured life insurance policy is doing a lot more for people than just a death benefit. In fact, it's providing a ton of what are called living benefits that you, the policyholder, can enjoy while you're here on this earth. So if you set that policy up so that it is to provide a supplemental income, it is to provide certain health care benefits so that you can mitigate the cost of long-term care, or it's set up, it's set up to also provide loans to you, low interest loans to you, so that you can go out and do different things like maybe purchase that boat or just, again, have that supplemental income in retirement. These are all things that you are counting on having happen. And you want to be able to sleep well at night knowing that your money is with an organization that understands those things that we just talked about. An organization that takes very seriously your ability to provide for your family, whether you're here or not. So that brings us to Colorado Bankers Life Insurance Company. As you can see from this banner, they're in rehabilitation. And you might be wondering, what's rehabilitation? Imagine if you logged on to this one day and wanted to sign into your account and bam, you're hit with rehabilitation. That's not normal. What the heck are they talking about? Well, rehabilitation is basically another term for the state has taken over this company. The state of North Carolina has come in and it said, you guys have been extremely derelict in your duty to maintain the financial strength of this company. And as such, we're going to go ahead and we're going to take over. We're going to step in and we're going to start to rearrange this company so that maybe at some point the policyholders can get something back. Now, I won't bore you with the details, but I was reading through their latest rehab report, and they've gone ahead and identified that the company's assets are equal to 64%, only 64% of the outstanding obligations that they have. Back in 2019, the company placed a moratorium on all withdrawals, surrenders, and transfers of funds. So basically, what that means is if you've got cash value over there, you can't get it out because there's a moratorium. Unless you file for a hardship, we'll go over that in a minute, but the hardship criteria is, of course, very restrictive. So imagine you entrusted this company, and now they're sending you a letter that says that your money cannot be accessed. How could this have been avoided? Now, let me throw one other caveat in there for you. This company actually did business with quite a few municipalities throughout the country. Okay. And they would come in and they would have people present this company as an option for county, state, and city employees to put their money with. So imagine you've got somebody that the county said, come on in here, present to my employees. You're already trusting them because the county or the municipality or the government, local or state government where you work, has invited them in to talk to you. So they have a responsibility as well. What they could have easily done was to monitor the ratings of this company, the financial strength and long-term issuer credit rating of this company, in order to figure out where they were in terms of their financial strength and viability to continue to do business and to continue to be entrusted with people's money. So when the county comes in and they tell you that, hey, this woman or this man, they're going to talk to you about this financial product, that's a very warm transfer. The gatekeeper, the government, has let them in. So your defenses are already down. They shouldn't be, as you will see here. You can easily go to AM Best rating services. AM Best rates the insurance companies. And if someone from the county had monitored this situation, they would have seen that this company, Colorado Bankers Life, was starting to, get into some territory that was, kind of concerning here. They dropped from an A rating, which is excellent, in 2015, and then they started to have these B plus plus ratings. Now, B plus plus, we'll see in a moment, is considered good, but we see over on their long-term issuer credit rating that they also dropped from an A and started to go up through the B. So at the very least, I believe that the counties that worked with these people to get this service should have at least issued some sort of notification to their employees, letting them know that the company started to drop in terms of its financial strength and credit rating. And then in June of 2019, the company got an E rating. So it skipped a lot of ratings. It skipped the C and the D and went straight to E. And what E means is that it's under regulatory review, not good at all. E does not stand for excellence like it used to in the elementary school I went to. So checking AM Best is something that you can easily do on your own. If you just go to the ambest.com website and type in the company you are thinking about dealing with in rating search, and they'll bring you up a rating. And they'll also bring you a history of ratings. And this is free. You don't have to pay for it. If you do too many, you might have to register, but that's at no cost to you. So we see what happened here. So what's going to happen with the folks that had their money in CB Life? Do they get it back? I've talked to the authorities down in North Carolina, and they said that it is a strong possibility that they will get the money back at some point. So let me just say one last thing about this situation. Some people may and that's I put uh, that in bold, italicize it, and underline it, may be able to get some money back if they are experiencing a hardship. Now, there are four basic criteria under which a hardship would be considered, and they are to prevent eviction or foreclosure on your principal residence, not your beach house, uninsured or unreimbursed medical expenses. So there may be a possibility for you to, be able to apply some of that money to medical expenses. Post-secondary education expenses. Again, there are criteria under that criteria, and then an inability to pay for basic life support needs. So those are the criteria under which a hardship will be entertained, but there is no guarantee that it will be paid out if you don't meet all of these criteria, especially. So a lot of people are left holding the bag. In my estimation, it is because their counties did not do their due diligence to protect their employees after introducing them to this company. And then we have other cases where people were just individuals and they decided to do business with the company for whatever reason. But if you do that, you've got to do a little due diligence. And the way you do that with an insurance company is you check AM Best. This has been Tyrone Keys. Remember, you can unlock prosperity with me, Keys.